Good morning, everyone. Welcome back to the channel. Today is Tuesday, November 25th, and we're breaking down the major events that shaped the markets yesterday, Monday the 24th. If you were watching the screens yesterday, you saw a sea of green as global markets kicked off the week with a synchronized relief rally, shaking off the tech-heavy sell-off from last week. The catalyst was a double dose of optimism, renewed hopes for a Federal Reserve rate cut in December, and unexpected progress in geopolitical peace talks. While the German economy flashes warning signs and the US government shutdown delays critical data, investors chose to focus on the liquidity spigot potentially opening up again. In today's report, we're covering the massive surge in Asian and European indices, why the New York Fed president's comments are driving price action, and the impact of the Russia-Ukraine peace framework on oil and defense stocks. Let's dive into the numbers. It was a risk-on Monday across the globe. Trading in Asia was dominated by a sharp rebound in Chinese assets, with Hong Kong's Hang Seng Index surging approximately 1.97% to close near the 25,716 level. India's Nifty 50 and Sensex managed to snap their losing streak, while South Korea's Kospi also joined the party, closing up over 1.2%, driven by bargain hunting in semiconductor stocks. Europe followed suit, ignoring weak economic data from Germany. The DAX 40 in Germany outperformed, jumping over 1.1% to trade above the 23,300 level. The FTSE 100 in the UK added a solid 0.5%, pushing past 9,500, supported by rate-sensitive sectors, and France's CAC 40 rose roughly 0.6%, recovering from last week's political jitters. In the United States, the bulls were in control from the pre-market session. The Dow Jones Industrial Average rallied over 400 points, and the S&P 500 reclaimed the 6,600 level. The Nasdaq Composite, which suffered the most last week, found its footing, rising roughly 0.8%, and the Volatility Index, or VIX, cooled off significantly, dropping back towards the 20 level. Now let's talk about the why. What changed sentiment so drastically from Friday's close? The primary driver is a delayed reaction to comments made late Friday by New York Fed President John Williams, who explicitly signaled room to lower interest rates in the near term. Markets interpreted this as a virtual guarantee of a rate cut in December, with the probability jumping from under 40% last week to nearly 70% today, crushing bond yields. However, it wasn't all sunshine. The German IFO Business Climate Index for November fell to 88.1, missing forecasts and confirming deteriorating business sentiment. Usually, this would drag markets down, but today, bad news was treated as good news because investors believe a recession in Germany will force the ECB to cut rates even more aggressively. We also have to mention the ongoing partial US government shutdown. While largely priced in, it's causing significant delays in economic data releases, like the retail sales report. This data vacuum is actually helping the bulls right now, as there are fewer negative reports to contradict this soft landing narrative. Politics played a massive role in today's price action, particularly in commodities. In a major geopolitical development, reports surfaced regarding progress in US-brokered peace talks between Ukraine and Russia in Geneva. While nothing is signed, the mere existence of an updated peace framework caused a massive repricing in the energy markets, with Brent crude slipping over 0.4% to trade around $61.60 a barrel. Over in the UK, tension is building ahead of Wednesday's autumn budget, where Chancellor Rachel Reeves is expected to announce tax hikes to plug public finance holes. Finally, let's look at the crypto markets, which had an interesting weekend and Monday session. After dipping late last week, Bitcoin has stabilized, trading firmly in the $66,000 range throughout the day, with the buy-the-dip crowd stepping in aggressively. The real story, however, is XRP. It has shown remarkable resilience, holding key support levels, with speculation running wild regarding a potential spot ETF approval. Data from CoinGecko shows over $560 million in token unlocks are hitting the market this week, which could introduce short-term selling pressure in specific names like Optimism. So, to wrap up Monday's action, markets rallied, fueled by Fed rate cut bets and peace talk progress. Macro, Germany is weak, but the Fed is dovish. Commodities. Oil is falling on geopolitical hopes. Gold is consolidating. Crypto. Bitcoin is stable. Eyes are on XRP. Tomorrow, keep your eyes peeled for the consumer confidence numbers. With the Fed blackout period approaching and the holiday-shortened week, liquidity will start to dry up by Wednesday. If you're holding positions, be ready for sharper moves on lower volume. That's your report for November 24th. If you found this helpful, hit that like button and subscribe for tomorrow's update. Let's have a great trading week.